61.44%. 61.4. That's how much the three main strategies from the live room have made this month. So I'm going to go through the strategies again, same as I did last month. So the reason for this video is just to give you a recap of February's results and have a look at how the trading's gone this month in the live room and with the position trading accounts that I trade every day. So as you can see on the screen here, we've got the hedging account. So this is trading with the market reversal alerts EA using an hourly hedging strategy. We banked 37.47% gain on the account this month. Still sitting in drawdown, which is usual for hedging. Hedging has always got a position on in the opposite direction, but fantastic result. We've got a great squeeze going on at the moment on the yen. So just got out of a little bit more profit on that today. So that's the hedging account. I'll go through these strategies in a minute in a little bit more detail. This is the ADR Reversals strategy and the ADR Reversals account. As you can see here, we're sitting in 16.77% of profit on this account this month. Running in a little bit of drawdown, but that's normal again. This is just normal positions on, waiting for those to turn into profit and move down there when they're ready. So that's the ADR Reversal strategy. Again, all traded with the market reversal alert CA. And the H1 M5 mean reversion strategy. Banked 7.92% this month, sitting in a little bit of drawdown, mainly on the yens as well. Tough month on this account, but again, all taken with the market reversal alert CA. The only thing that I'm doing is setting targets once the positions have started to be put on and taking them off and doing drawdown control when needed. So I'm going to quickly run through the three main strategies. All of these strategies can be found on the website, on the marketstructuretrader.com website. You can see links going along the bottom here all the time. There is a position trading bootcamp here, which teaches you exactly how I trade using position trading, which is taking multiple trades, which are using small lots and scaling into and out of market movement. The market reversal alert CA is here on the website as well. So this is the EA that I use to trade every day. So this executes all the positions for me. It can also be used to do drawdown control automatically on the positions if you need to. I tend to do that part of it manually myself, but obviously the EA would execute that for you. So you can find all that information on the website here. So there's videos on there that explain how the EA works, and obviously the position trading bootcamp explains how I position trade. So just a quick overview of the strategies. Let me just pick one here, CADCHF, for example. So this is the H1 M5 mean reversion strategy. So the strategy basically revolves around market movement. So as price pushes in one direction and the market gets exposed in one direction, we get an alert on the relative strength indicator to tell us that the market has moved a long way in one direction. It's what I call elastic band theory in the bootcamp. And basically we are waiting for the market to pull back on that move because it's stretched, and we enter on a mean reversion trade in the opposite direction. As you can see on this one, the CADCHF. We've got the RSI extension and we're basically playing it back up on the mean reversion. So the way that this strategy works is the EA waits for the RSI to get to an extended level, and these extended levels you can set to whatever you want to, but I specifically use the 25 and the 75 on the hourly time frame myself. And then we drop down to M5 and the EA waits for a market reversal alert to enter into trades. That's a market reversal alert, which is basically a break in structure back in the opposite direction. And then we take that trade and move up to a target, which we can set at wherever we think price is going to be headed. So that's the H1 M5 mean reversion. Very, very simple strategy. So the EA just sits here and monitors the hourly RSI levels, waits for them to get to an extended condition. This is the RSI dashboard, but the EA obviously monitors it itself. And basically takes those trades. So that's that account. Nice profit again this month, 7.92. We did 40% in total in January. This month we're up to 61.4. That's across all three strategies, all three accounts. Second strategy is ADR reversals. So this works off of the average daily range movement of instruments. So if we pick, for example, the US dollar Swiss, that is a trade that has been entered into from back here. So we're still in this trade, been sitting in this one for 5 days now. But so this strategy basically works using the average daily range of the instrument. An average daily range works on all FX pairs, indices, works on stocks, will work on crypto, works on anything. Basically, all it is a measurement of the average daily range of any instrument. So what we do is, as you can see here, is the vast majority of the time the market spends its time sitting sideways within its average daily range. When the market pushes beyond its average daily range, it will then push back in the opposite direction. So what these lines indicate is what the average daily range for the last 10 days has been on the instrument. When we push beyond these levels, we get to 100, 125, 150 extensions, etc. Price gets exhausted and pulls back. So it's kind of an intraday scalping strategy. A lot of the trades will pan out within 1 to 2 trades within a position. And then you just exit when it's moved down roughly around about half an ADR, third of an ADR, or however far you want to take it, basically. So this one's got multiple positions on. But as you can see, that's that strategy. So it's basically pushing beyond the average daily range. And then we wait for, again, a reversal alert on the lower time frame. So that is a reversal alert there again. So once we hit that, we wait for the structure to break in the opposite direction. So after we've pushed, we wait for the sellers to jump on board, take control of the market, and then we enter with those sellers and drive back down. So that is your ADR reversals. Again, these are all explained in the bootcamp, all explained on the website. 16.77% banked there. The H1 hedging strategy. This is a very, very simple strategy. Banks constantly, every day, as you can see. So these red numbers you can see here, these are where I've been doing drawdown control. So every now and again, you will find an instrument will get slightly higher in drawdown than you want it to or you expect it to. For me, I wait for positions to get to somewhere in the region of 3% before I start looking to do drawdown control. So basically, these are drawdown control days and these are normal trading days. So what the strategy does is, let's just try and find one that's hedged. Euro Swiss is a good example. So all this strategy is doing is using the hourly time frame, and every time we get a reversal alert, the market shifts structure back in the opposite direction, i.e. the buyers take control of the market. We jump in long with those buyers and anticipate them moving somewhere up so that we can take off roughly 0.5% to 1% in profit, or 0.25%, whatever you want to take off. But the idea of the strategy is we don't know obviously which way price is going to go. So if we get a market reversal alert short, we enter short. If we get a market reversal alert long, we enter long. And then we set a distance before we scale back into our positions if they are going wrong. So what will happen in this particular case is we go short here, we go long there. And if the market moves up, we take profit on this position and scale into the short. If the market moves down, we take profit on that position and then we scale into the long and get out of that position when the market moves back up. So that's all position trading is, and all the H1 hedging strategy is doing is entering on reversal alerts and then spacing positions out a decent distance so that we can get in and out on the normal market structure movements, which you can see played out on the screen there. So this strategy is a higher risk strategy and obviously a higher return with the higher risk. So because we are hedging, it means that, as you can see here, we have a buy on and we have sells on. So the vast majority of the time, you're entering into positions in both directions, which means that when you are right, you bank the money, and with the wrong positions, they will be in drawdown. So every time you bank, you're left usually with a position in drawdown. So the drawdown on the account is always sitting somewhere in the region of 10 to 30% on average. Occasionally, it can go a little bit more than that, but that's when we enact drawdown control if necessary. But it will constantly bank in the region of, and it varies, but in the region of 20, 30, 40% a month. So if you go back and look at the video from last month, the results from January that I posted, you'll see what that one produced then. So it's constantly banking money, but it's a more high risk strategy. So I've got a lower allocation of funds into this particular account. So there's 3 accounts. So this month, 61.44 is the profit figure. That's cumulative across all 3 accounts. Yeah, I'll be back in March and we'll have a look at how we've done in March as well. So if you want to find out more information about the strategies and about the EA that I use to trade the positions, that's all available on the website. And you can also come into the live rooms, which are scheduled every single day. If you go to the live rooms on the website, you'll see the schedule. So I post every day what the live rooms are. There's either 1 or 2 live rooms a day, depending on the news. All right. So hope you enjoyed that, and come and join me in the live room soon.